Good afternoon, everyone. This is Donna Miller from C3 Workplace, and I am here with
Laura Melville. Good afternoon.
Hey, everybody. Thank you for joining us for another financially driven webinar. We'll talk not so much about QuickBooks today, but more about budget forecasting and performance review, something we know you all do on a regular basis. Ha, ha, ha. But before we get started, a little bit of housekeeping. You are all muted on the call, so if you have any questions, just feel free to type them into your chat window, and we will try to get to them. We spend about 30 minutes on these webinars, and surprisingly, the time goes very fast. But we'll make sure you have our contact info in case there was something you had wanted us to cover or you have a question. And also in the spirit of housekeeping and items, you may or may not know, C3 Workplace, we have business centers in Montclair and Sparta, and for the last 20 years, we have been providing flexible workspace, all kinds of back office support, and educational programs. About 4 years ago, we rebranded. We had opened under the brand Above and Beyond, and we rebranded to C3 Workplace, which stands for Connect, Collaborate, Community. And my vision is that by giving businesses a way to connect and collaborate, that they will grow, I will grow, and that business will spill into our community. So it's a pretty awesome thing, and it's really happening in both Montclair and Sparta. So today's webinar is certainly under the umbrella of our educational programs, and Laura and I do these about once a month. We know that when you have a business and you're the person leading that business, there are so many things you need to know and so many hats that you have to wear. So we know that one of the pillars that are so important is the whole financial piece. And as I mentioned, Laura's going to talk to us, and I'll interject as well, today about budget, forecast, and performance review. And, I thought what I wanted to share with all of you as we open up this webinar today is I opened my business 20 years ago, and I was working full-time, and I wrote a business plan to launch what was at that time Above and Beyond. And it took me quite a while to write that business plan because the budget and the forecasting was so pivotal to that process. And it took me, I was working full-time, so it took me a very long time to write that business plan. But because of that, what I like to call bulletproof business plan, which included very well thought out budgets and forecasting and criteria, I was able to raise a significant amount of money and open the company. And it turned out that became the cornerstone for, everything we did going forward. And so, we would love to help all of you create that same kind of tool that we know is so important in starting and growing a business. So, Laura, let me kind of turn it over to you and get off of my soapbox. But always hear me talk about business planning. So talk to us a little bit about what we're going to go over today.
Okay. I figured I would start with just a quick explanation or definition of the different terms. In its simplest form, a budget is a plan for the year. It's an estimate of how much income you think you'll take in and how many expenses you think you will pay out in a certain time frame. Most often, this time frame is a calendar or a fiscal year, depending on the type of tax year for your business. Mm-hmm. Mm-hmm. The second one is a forecast. It's very similar to a budget, but unlike a budget, it's continually changing. It too is an estimate of how much money you think you'll take in and how many expenses you think you will pay out in a certain time period. But a forecast changes based on information gained during the course of your year.
So is this kind of is this a little bit of where we would go to budget versus actual reports, or is that?
Yep, okay. Yep, and you use the information that you gain to continue on throughout the year.
Okay, and I know you'll talk about how to put that.
Yep. And then performance reviews. I'm sure many of you are familiar with them, at work. It's the time of year when employers and employees sit down and assess where the employee is at How well did the employee do this year? What improvements can be made by the employee? Will there be a raise? And so on and so forth. And it's my opinion that this same process should be given to a business as well. You know, questions like, how is the business doing? What improvements can be made? Will I be able to take a salary from it this year? And so on.
Well, I think that's a really good point because, you know, performance planning is just that. So it's reviewing and planning, and I think the smartest business owners are staying in front of the trends. So we might have seasonal businesses, and that might impact performance. But I love the concept of applying a performance plan to a company as opposed to an individual.
Yep, the same concept.
Excellent.
You know, and when you put all these three parts together, the budget, the forecast, and the performance review, it does take a lot of time and effort, but the benefits can far outweigh that if it's done so correctly. The first thing you do is you establish your budget, and you may ask how you do that, and there's several different ways you can do that, all with varying degrees of time commitment and detail. But basically, you'll get back what you put into it. So there's, for example, many software programs such as QuickBooks have a budget component built right in. The challenge then becomes in entering estimates. If you're a new business with not a lot of historical information, you'll have to start out with your best estimate. And this can take some time and thought. If you're creating a budget for the first time and you do have historical information, take a look at it. You know, don't just take last year's results and divide by 12, which I've seen many people do. Just, you know, look at your history. What patterns, trends, cycles do you see? You know, use that information to enter really good estimates. Say, for example, if you're a landscaper in the Northeast only and you do no snow plowing, you may look back and obviously see that for January, February, and March, every year your sales drop dramatically. You should reflect that when you're entering your January, February numbers going forward.
Right. Now, when we do a budget, because we do use QuickBooks, it is a real time saver. QuickBooks, when you input the budget, it allows you to use the historical data, and it gives you an annual total, and then it allows you very quickly to spread that over 12 months.
Yes.
Now, that may not be the reality, but it makes doing that just so much easier, and then you can plug in the variables.
Exactly.
Now, the other part is, and I don't know if you can do this in QuickBooks, but I know that, you know, I kind of do it more in Excel, but you kind of have worst case, best case scenarios. And, you know, when I was writing my first business plan for the company, you know, that's what I did. I was very, very conservative when I estimated my income, and I really inflated my expenses, and it turned out that was really how it went. So sometimes I think that works better in Excel than in the accounting program, that kind of what-if function.
Exactly. And you can, honestly, you can set up two budgets, you know, if you want to be realistic, but then, you know, have another budget that's more, you know, if everything works out great. So that way, you know, if everything works out wonderfully and unexpected, you're ready for it as well.
Right. And the other thing is, you know, just to kind of take two steps backwards, for solopreneurs, we're talking about a business budget, but when I teach the Earn More program and we do that first component of financial, the first thing we start with is a personal budget.
Okay.
Because the reality is, if you don't have a personal budget, which applies the same principles, what am I taking in, what's going out, what's left, if you don't have a handle on your personal budget, then you don't know what you need to take out of the company.
Exactly.
So I think the precursor even to the company budget is the personal budget.
Excellent. That's true. That's a very good point. And then I guess with the your forecast and the performance review, those two steps kind of work hand in hand. On a regular basis, monthly or quarterly, you should have that performance review. How did you do compared to your original budget? Were you really far off, and if so, why? What things did you not consider that you didn't think of? Were there things that happened unexpectedly? Will this affect the future, and if so, how? Have you learned of things headed your way or even your industry's way in the future that may impact your future results? You take all this wonderful information and do your best calculations and plan ahead now by adjusting your forecast.
So how do we, for our industries, I mean, it would seem to me also that to look at industry trends to look at industry trends, we all have industry associations, which we should definitely be connected with, so that we can understand what the trends or the KPIs, and we haven't really talked about that yet, and I want to kind of interject that into the conversation. One of the things that we do for C3 Workplace, and you do it for our clients who use our CFO services, is we establish, and I guess this kind of comes under performance review, but we establish outside of your standard income and expense categories, we like to establish KPIs, which are key performance indicators. So what are the economic drivers of the individual business that give an indication of the well-being financially of the company? So C3 Workplace, certainly we look at occupancy rates. Clearly, that's going to be a big factor for us. And because I belong to the Global Workspace Association, I know what happens industry-wide. So I think we all need to be looking at our professional associations for some of those metrics and then deciding what are the key performance indicators that we need to be monitoring for our individual businesses. We also happen to monitor billable and non-billable time. That's a factor for us. We know in a corporate environment, in a corporate billable environment, they want their employees to bill literally 97% of their time. If I could get there, I would be swimming in it. So these are some of the other things that we have to look at and establish to determine the health of our business, the growth potential, and talk to us a little bit about, in all of this, kind of, we always talk to people about kind of different areas of profitability. So, and we talked about this, is it profitability by project, by class of business? How does all of that fit into this performance review?
That's a really good point. We do have several clients, for example, that have different parts to their business. And, for example, just say there's a client that's got 3 different kinds of business, 3 types. One thinks, he just loves this, it's the best one ever. There's the second one that kind of, just hangs out there, and then the third one that he's thinking about getting rid of. Well, honestly, if you take a look at your profit and loss by each one of those 3 individually, you may find results that are different. You may find that the one that you want to get rid of is actually the most profitable. So it's really important to know, one may be bringing in the most money, but it may be spending the most money. So it's important to see the net profit at the bottom and to make good decisions on different parts of your business.
Okay. Sorry, I kind of waylaid the conversation there, as I tend to do. But go ahead.
Okay. So then it's also a good part of the performance review is to have time set up. Now, budget, and then most people are aware of this, you should really try to work on this during the last quarter of the tax year. But the performance reviews and forecasts should definitely be no less than quarterly, and if you can even possibly do it monthly, that's even better. And I often suggest to clients to schedule specific dates and deadlines for doing performance reviews in the next year while you're creating your budget. Keeping accountable and regimented, in my opinion, is key. And you can also make at least a portion of the performance review a company-wide event, and I'll explain that in a little bit.
Okay, great.
And so everyone's probably listening to this saying, why put in all this time and effort? Is it really going to be worth it?
It is a fair amount of time and effort, but it's how else do you know where you're at?
Exactly. Your business will be better off for it, and so will you. You may not see immediate results. It takes some time to reap the rewards of this work. But at some point, you'll obtain a pretty good idea of how your company is doing, how your company will do month to month, and how and why this is all happening. Second, if you have a data-packed estimate of how much money you'll bring in and how much money is going to be going out monthly, well, that's your cash flow. I don't know any business that doesn't want a comfortable expectation of their cash flow. It's good to know ahead of time periods of expected cash flow and lack of cash flow, unfortunately. It's better to plan now to best get through each of those times. And then lastly, the forecast. We do ours for our clients on a rolling basis, which means that each month as a performance review closes, we use all that we've learned for that month, and we go out one more month in our forecast. So at any point in time, we have 12 months of a forecast. And one of the nice things about this is when you get to the end of the year, in December, you know, some people are still working on getting their budgets for the following year, you'll be all set, right? Because you'll have worked on it as you've gone.
Right, so it's creating kind of the foundation, and then it becomes a monthly task, which is not quite so onerous. You know, the other thing is, when you talk here about what's in it for me, the other thing is, you know, when I opened my business, I started with the end in mind. I started thinking, when am I going to get out of this? How much do I need to get out of it? And as I've often spoken about during my talks, my original goal was to retire when I was 50. I'm considerably north of that now. And honestly, love what I do and have no desire anymore to retire. But I do have a new goal, and that is to work a certain number of hours per week from anywhere in the world. But the truth is, these budgets, forecasts, and performance reviews are the foundation for your exit strategy. And your exit strategy, you know, you may be in a service business and all you have is goodwill, and that doesn't have a real tangible value, a hard asset value. But the reality is, when you have these tools in place, I believe you are maximizing the value, the hard dollar value of your goodwill, because it's not in your head.
Exactly.
It's on paper, it's tangible, you've got the historical data, you can now demonstrate trends, you can indicate how, you know, your income is spread across multiple either line items or clients so that it's diversified and that minimizes risk. So this work to me is not just about the financial literacy, which is absolutely key to making decisions, but it's also about exit strategy. Yep. And, you know, let's face it, nobody wants to do this forever, and we are all going to have an exit strategy. But the other thing is, just to digress for yet another moment, because you know how I do this, talk to us about how you can use this data to make marketing decisions.
Okay, very good point. I guess what you can do, and we do with clients, is you can track what types of marketing you do and how that's generating business for you. You can do that within QuickBooks quite simply. You know, it takes a little bit to set up, but eventually you can create reports that are showing where your sales are coming from, where your leads are coming from, where you, and with that information, that's where you should be putting your time in on the ones that make sense.
Right, and that's also going to lead us to know what our cost of client acquisition is, you know, which is always shockingly high.
Yep.
So the data that you're producing here is about financial literacy, it's about cash flow, it's about performance, it's about exit strategy, it's about making marketing decisions.
Yep.
So to me, even though there's an investment in time, I'm not really sure how successful companies grow without it.
Exactly.
But that could be my naive view of the world.
No. And then before I had mentioned the performance reviews, to get back that real quickly, making it a company-wide event, you know, it is possible, try to make a portion of the performance review a company-wide event. This holds true, in my opinion, you know, for businesses of 2 people, 10 people, 20 people or more. And the reason I say this is as you go through your budget, line item by line item, the employees are what often drives some of those line items for revenue and expenses. There's no use creating a budget and not letting those that are actually determining the final results know what that budget is. And if time and resources permit, you can even, you know, perhaps create incentives for profitability without sacrificing quality. In my opinion, it's just a win-win and a motivator for all involved.
I agree, and I have to say that, you know, I do have a team of 12, but some of our participants today, they could be solopreneurs, they could be smaller companies, and when you talk about sharing this company-wide, I would edit that to say share this team-wide, because your team, it could be just, quote-unquote, just you, but the reality is chances are you have some you have stakeholders.
Mm-hmm.
Frankly, that could be some key partnerships that you have. It could be your spouse.
Mm-hmm.
But the reality is, and it could be your employees or your key subcontractors. By pulling those people together, then you won't share everything with them.
Exactly.
You'll share what you want to share with them. But the reality is, when a team co-authors a solution, they are vested in that solution.
Exactly.
So the outcome is going to be much greater than saying, okay, Joe, you need to cut 10%, 10% of your marketing budget because, we need to make these changes. I was a living, breathing example of that after the crash of 2008.
Right.
As a team, we sat down and we looked at the budget and we said, okay, where are we going to make some changes? And my team was very much part of that process, and they wanted to be part of the solution. They didn't want to be sitting in the dark.
Exactly.
So it was what could have been a really negative thing actually turned out to be a very positive thing for the company.
Very motivating, I'm sure.
Yes, it was.
Okay. So, if you're having cash flow issues or if you're not sure when and where to invest time and money into your business, if you're having a hard time getting employees to engage, if you want to grow your company, if you want to sell your company at a certain point in time, in our opinion, do yourself a favor and create a budget. Review your results monthly and quarterly or quarterly, and use what you've learned in that review to plan out the next 12 months. You'll certainly be glad you did.
Now, so we have budget, we have forecast, we have performance review. And we talked a little bit before about KPIs. To me, it's part of the performance review, which may or may not come off the typical P&L statement.
Right.
So what we wanted all of our participants to understand is these are foundational tools that we highly recommend you do. As an organization, Laura leads up our accounting support services area, where we do lots of bookkeeping, we do training, and we do a combination. So if you need help setting up the file, and then you want to do it yourself, and you want to have us come in and check on it periodically, so we create kind of a mix that makes sense for any client. And the reality is these budgeting, performance review, and forecasting services are a wraparound service that we use. And I guess we've kind of coined the term CFO-like.
Yeah.
It's, our approach to most everything that we do is we try and bring a very high level of professionalism at a very affordable price. And we've really been able to do this with our kind of CFO wraparound to the bookkeeping services. So it's something that we can set up for companies pretty easily. It wraps around. We do largely QuickBooks, but can we do the CFO wraparound for people who are in other programs?
Sure. A lot can be exported to Excel, and you can work with that.
Right.
We get you started in the right direction.
Exactly. It's the mindset of having the financial literacy.
Yep.
So those are that's kind of an overview. These webinars are kind of quick. We do have another opportunity for you to garner yet more fabulous information from Laura, who, as I mentioned, heads up our accounting support services. And Laura is not only a QuickBooks Certified Pro Advisor, she is also a CPA. On March 20th, Laura will be one of our resident experts at C3 Workplace. I think that's going to be in Montclair.
Yep, sure.
So there will be 4 opportunities for either face-to-face or virtual sessions with Laura. You can talk about this very topic, or you can talk about your specific QuickBooks issues or your Excel issues. She does that out of Montclair or, again, virtual, and there are complimentary 25-minute consults. There are only 4 of them. If that's something you're interested in, I'm going to recommend that you go to our website. If you go to the event page and scroll down a little bit, you will see March 20th. Laura is the office hours expert. What are we talking about next month on our webinar?
Next month. New offerings from QuickBooks.
We're liking QuickBooks Online, so you're going to see more and more webinars from us on that. So, and again, Laura's contact info is on the screen. If we've missed anything or if you have any questions, since we are out of time, please feel free to email them into Laura. we thank all of you for attending today, and we hope that you will be able to improve your financial literacy so that you can make better decisions in your business and be more successful. Laura, as always, thank you.
Oh, thank you.
Have a great day, everybody.